Hi everyone, I'm Christian Chan, CEO at AssetMark. 2026 has started with wave after wave of serious and headline-grabbing events. Many of these events have a real impact on people's lives, so you might expect that kind of volatile backdrop to come with market turbulence. But so far, we've seen the exact opposite. Equity market volatility so far this year has been lower than most of 2025, and interest rate volatility is near its lowest level in 4 years. The reason is straightforward. Despite the noise, the US economy remains on solid footing. The Atlanta Fed's GDP Now estimate suggests current growth in the 2.5% to 3% range when you strip out some more volatile components. Now looking forward, we expect households to benefit from fiscal support through higher than normal tax refunds sometime in the first half of the year, and financial conditions have eased as interest rates have come down from their peaks. As long as economic growth holds up, markets tend to look through the headlines and focus on earnings and fundamentals. Now, as noisy as it's been, this year is likely to get even noisier as we move closer to the midterm elections. Political rhetoric and policy debates will intensify, creating more headlines even if the underlying economic picture remains stable. Now, for investors, the takeaway is unchanged. Focus on the fundamentals of the economy and the fundamentals of investing. That means stay invested, stay diversified, and stay disciplined to your long-term investment plan. Thanks for watching this month's 2-Minute CEO Update. We'll talk to you next month.